Have you ever wondered how to get started in the stock market? Let's dive into this fascinating world together. Imagine the stock market as a bustling marketplace, but instead of buying fresh produce or handmade crafts, you're buying pieces of companies, known as stocks. Why would anyone want to do that, you ask? Well, owning stocks means you own a part of that company, and as the company grows, so does your investment. Now, the stock market isn't just a playground for the rich and famous. It's a place where anyone, regardless of their background, can invest and potentially grow their wealth. It's like planting a money tree. You put in a seed, or in this case, an initial investment, and with time, patience, and a bit of luck, you may see it grow into something much more substantial. It's all about securing your financial future. Understanding the stock market is an important step towards your financial journey. Before you dive into the stock market, know your financial goals. Why is this important? Well, without a clear destination in mind, any road will take you there. The same applies to your financial journey. Defining your financial goals gives you a roadmap on how to navigate your investments in the stock market. Are you saving for a rainy day, planning for retirement, or maybe funding your child's education? These are all different goals that will require different investment strategies. Your financial goals will dictate the type of stocks you'll invest in, the level of risk you're willing to take, and the length of time you're planning to invest for. Remember, financial goals should be SMART, specific, measurable, achievable, relevant, and time-bound. This way, they can serve as a guiding light in your decision-making processes, helping you make informed choices that align with your financial objectives. Knowing your financial goals can steer your investment decisions in the right direction. The stock market can seem complex, but the basics are quite simple. Let's start with stocks. A stock is a type of investment that represents ownership in a company. When you buy a stock, you're buying a piece of that company, also known as a share. Next, let's talk about dividends. Dividends are portions of a company's profit that are distributed to shareholders. If the company you've invested in does well, you could receive a dividend as a reward for your investment. Then we have market capitalization, often shortened to market cap. This is the total value of all a company's shares of stock. It's calculated by multiplying the company's share price by the number of its outstanding shares. Now let's clarify the difference between investing and trading. Investing is about buying shares for the long term, with the hope that they'll increase in value over time. Trading, on the other hand, involves buying and selling shares more frequently, aiming to make quick profits from short-term price fluctuations. Understanding these basic terms can help simplify your stock market journey. Research is the cornerstone of successful investing. It's not just about throwing your money at any company that seems promising. It's about understanding the company's financial health, its competitive position, and the industry it operates in. Let's start with researching individual companies. As these are public companies, information is readily available, and financial statements can be found on their websites. These statements will give you insights into their revenue, profit margins, and debt levels, among other things. Next, you'll want to understand market trends. Are certain industries on the rise while others are on the decline? This can significantly impact a company's performance. Don't forget about economic factors. Interest rates, inflation, and economic growth can all influence the stock market. There are resources to help you with this research. Financial news outlets provide current information, while company reports offer detailed insights. Stock analysis tools can also be useful in making sense of all this information. Well-conducted research can be your most powerful tool in the stock market. Ready to make your first investment? Let's walk through the process. To kick things off, you'll need to open a brokerage account. This is your gateway to the stock market, allowing you to buy and sell stocks. There are countless brokerage firms out there, so take your time to find one that suits your needs. Next, it's time to choose your first stock. This is where your research comes into play. Look for companies that align with your financial goals and risk tolerance. Now onto the exciting part, making your first trade. Remember, it's wise to start small. You don't need to invest thousands from the get-go. Buy a few shares and watch how they perform. Lastly, don't forget the golden rule of investing: diversify. Spread your investments across different sectors to reduce risk. Index funds are a great investment that offer diversification already built in. Start small, be patient, and stay consistent.